Heya Cryptozens, tonight's show, Weekend Roundup, CDPQ, Eqonex, Federal Reserve, Hodlnaut, and HUSD. It's 10 p.m. Pacific time. The date is August 20th, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I will be your host. The cover model, mascot, and co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Monday. Eqonex is a NASDAQ-listed digital asset investment firm, and they announced that they would be exiting, quote, the crowded crypto exchange space. So they're closing down that part of their operations. Specifically, in their Monday announcement, Eqonex said that they would be closing trading on their platform on August 22nd. This would still give users until September 14th to withdraw funds. They said that this move was focused on offering, quote, the most potential for revenue growth and long-term financial stability. Now, when they say that, they're talking about the asset management and custody services at Digivault. They continued saying things like we've heard before, this move will simplify their business. It will narrow their focus and free up reserves. They're going to become a more efficient organization with greater ability to go after their targets with the most potential. Jonathan Farnow is Eqonex's CEO. If you were to listen to him talk, you might think that it's all about the market. And you'd be right. He said, quote, we take a realistic view that our exchange will not move the needle for us financially over the near to medium term. We don't see value in continuing to bear the costs of operating an exchange during what might be a prolonged market downturn. Now, EQO is their token. Well, that token is done. They said that it would stop trading immediately. In addition, they're looking to move their principal business and their key management team members from Hong Kong to the UK. Right now, there are a number of Digivault operations already underway there. Eqonex itself launched in May of 2020. Even so, they've had a few changes in leadership. Richard Byworth was CEO from 2018 to 2021. And then Andrew Eldon started in December of last year, serving as interim CEO. And then Farnell took the reins back in March, having worked at both Binance and eToro. Now, last December, the board of directors said that they were discussing the possibility of finding someone to either purchase the company or to get a merger going or something. This was before all the craziness in the markets this year. Now, Bifinity, which is a Binance affiliate, they offered a $36 million convertible loan to Eqonex. This would let them focus on their digital custody services. At the time of writing, shares of Eqonex were down 1.75%. Tuesday. So, Singaporean law is a little different in one respect. Apparently, you can file for temporary protection against pretty much any kind of legal proceedings and claims. Well, Hodlnaut doesn't want that. So they're trying to buy themselves some time. They think that if they're given sufficient breathing room, they can fix their liquidity problems. And that if they can do that, they believe they can avoid a massive liquidation of assets in a bear market. And so it came to pass that Hodlnaut put out an announcement today. In that announcement, they told their users that they've applied to the Singapore High Court to be placed under judicial management. That is that breathing room that they're looking for. They said, quote, we are aiming to avoid a forced liquidation of our assets as it's a suboptimal solution that will require us to sell our users' cryptocurrencies, such as Bitcoin, Ethereum, and wrapped Bitcoin, at these current depressed asset prices. Instead, we believe that undergoing judicial management would provide the best chance of recovery. And they're not necessarily wrong here. We are in a bear market, and those coins will not have the value that they had a year ago. Now, the way this works in Singapore is it's called judicial management, and that's when the court appoints someone called a judicial manager for the company, and they take over the company's management for a time. Appointing a judicial manager can take a while, up to a few months. So usually they appoint an interim manager to take on the job for a temporary basis. And so it is that Tam Chi Chong, director of Kairos Corporate Advisory, they've been put forward by Hodlnaut as the interim and final judicial manager in their case. They point to Chong's 4 decades of experience in corporate finance advisory. In addition to that, he's already taken on the role of a judicial manager for a number of companies undergoing restructuring. This announcement said, quote, "With his experience and track record, we believe that he will be able to execute our recovery plan and restructure the business effectively." Now, this suggestion has not been officially heard by the court yet. That will happen on Friday the 19th. That's when they're expected to give the court an update on their judicial manager application process. So what Hodlnaut is looking for here is protection from legal claims and proceedings, even though on a temporary basis. They believe that going under judicial management would give them, quote, "breathing room to focus our efforts on the recovery plan to rehabilitate the company." Wednesday. The Federal Reserve Board sent out a letter on Tuesday. This went to all their supervisory officers and staff, as well as the banks that they supervise. This letter lays out the initial steps a bank has to go through before they can start to get involved in crypto-related activities. This letter also instructs banks that they must notify the Reserve before going forward with any of these activities. This is just a pure chilling move by the Fed. Crypto is direct competition when you're a central banker. And now the supervisory regulatory agency over banks is telling their banks, "Hey, you people that we supervise, you better talk to us before getting involved with crypto." Now, this letter was signed by the directors of the Regulatory and Community Affairs divisions. This direction applies to all banks, regardless of size. It applies to any bank supervised by the Fed. Now, it starts off with a warning about the dangers associated with crypto, and that the Fed is watching. The letter said, quote, "Given the heightened and novel risks posed by crypto assets, the Federal Reserve is closely monitoring related developments and banking organizations' participation in crypto asset-related activities." And then they went on to talk about risk management, making sure that there was enough risk preparations for activities with crypto assets. They also suggested checking with state and federal laws before getting started and to make sure that they had all the required filings in. They specifically mentioned the Bank Holding Company Act, the Homeowners Loan Act, the Federal Reserve Act, and the Federal Deposit Insurance Act. Now remember, earlier this week, we talked about the FDIC and that they were telling banks that they supervise the same thing. The salient point of both letters was to make sure that banks know to talk to their supervisory contacts before advancing any planned activities with crypto. If banks are already involved, they're supposed to provide notification anyway and then wait for feedback. This letter comes from the Fed after they set out new guidelines for reserve banks opening Federal Reserve's accounts for crypto banks like the ones in Wyoming. Thursday. Caisse de dépôt et placement du Québec, or CDPQ, is an institutional investor, and their big thing has been managing retirement assets. Most of their clientele is based in the French-speaking province of Quebec. Now, La Presse recently reported that CDPQ is writing off pretty much their entire $200 million Canadian investment. That's around $154.7 million. That investment they're writing off was in the Celsius network. That's right. Celsius claims yet another victim. So about 10 months ago, CDPQ and a growth equity firm by the name of Westcap, they invested in Celsius. They put in a joint investment of $400 million into Celsius at a valuation of $3 billion Canadian. Now, this was in the good old days when Celsius worked, when they paid interest to their investors. $850 million by that point. And that was when they had over $25 billion in assets and 1,000 employees. Now, of course, Celsius is in bankruptcy court. They're looking at an asset gap of $2.85 billion. CDPQ's CEO, Charles Emond, said that they recently invested early in the crypto industry. He said, quote, "We arrived too soon in a sector which was in transition." And Edmond is insisting that they didn't just degen into investing in Celsius. We know better now, but they looked pretty good. And it was only after they lost a whole lot of money and froze customer withdrawals now, but back then they were good. Edmond said, quote, "The due diligence was quite extensive with many experts and consultants involved. The team came in cautiously. We had a 4% equity stake. The conversations we had internally were pretty straightforward. The teams are accountable for that." When you hear about these kinds of stories, I always worry about the pensioners. These folks put their money in a fund, trusting them to be good stewards of that money. So when I hear something like this where a fund gets hurt, that's bad. That said, I'm not so worried in this case, because while $154.7 million is a lot of money to me, not so much for them. By the end of June this year, CDPQ was managing over $390 billion in total assets. Now, they are weighing their legal options against Celsius. That said, I wouldn't be too optimistic about getting any money if I were them. Not only is Celsius in bankruptcy court, as we recently reported, they're due to run out of money in October. Friday. Huobi explained what happened with HUSD when that stablecoin lost its peg. They said that the depeg was caused because the HUSD team closed some market maker accounts to comply with regulations in certain regions. Now, reportedly, it only took them 20 minutes to identify the problem. 12 hours later, they returned the stablecoin to its peg. And now that it has regained its peg, Huobi is providing a timeline to explain what happened and how it was fixed. They put out a tweet saying that they detected, quote, "unusual price fluctuations." Now, here's something a lot of people don't know. In fact, it took most people by surprise to find out that Huobi does not control its namesake stablecoin. In fact, they passed control over to Stable Universe Limited. That happened when Huobi exited its stake back in April. On Thursday, HUSD depegged. At the start of the day, it was trading at 92 cents, which is not what you want to see from a dollar stablecoin. It got worse as it fell to 82 cents a few hours later. Now, this really disturbed people because HUSD was considered pretty safe. Safe because it would be the first fully backed centralized stablecoin to fail. So it kind of freaked people out a bit when Huobi was contacted about the depegging, and Huobi said basically, "We're not in charge anymore." They said, quote, "Huobi Global exited its stake in Stable Universal in April 2022. We urge HUSD to address its liquidity issues as soon as possible." Well, that meant Stable Universal. Now, reportedly, Huobi had them on the phone in 5 minutes. Within 25 minutes of Huobi first detecting the problem, apparently the cause had been identified. Before the end of the day, Huobi and Stable Universal had the problem solved. It had to do with differences in banking hours as it related to closing several accounts. HUSD tweeted, quote, "We made the decision to close several accounts in specific regions to comply with legal requirements, which included some market maker accounts. Due to the time difference in banking hours, this resulted in a short-term liquidity problem, but has since been resolved." And that's going to do it for us tonight. I want to thank you, my listener, because if you stop listening, I will stop talking. Quick programming note, I am out on my anniversary, so there will be no show tomorrow night. Take care of yourselves, but take care of each other too. We'll see you Monday.